Ngā mihi o Matariki. I hope you had a great long weekend and enjoyed the most of Matariki, maybe even saw the stars on the horizon. This week I'm going to talk about what I saw coming out of the Reserve Bank choosing not to move the OCR last week and what those positives are. I think there's some huge positives there for real estate agents, and I've gone and had a bit of a think about breaking those down into what they are. So, here today on Subject to Finance, I'm going to give you my 3 reasons why I see no move in terms of the official cash rate as being a positive for real estate agents in general. So, first reason, buyer confidence. Buyer confidence is a huge thing when it comes to making a large asset purchase decision, such as buying a home. And it's the thing that's been putting a lot of potential buyers off buying a new home and vendors off selling for the last year or so. And so I think that's the part that I want to sort of start with. Buyer confidence, not to be underestimated, is actually not about anything more than stability. Being comfortable in knowing that where I sit today isn't going to be unchanged, my cost of living is not going to go up, my cost of borrowing is not going to go up, I can actually afford to buy this property and not be at risk of being affected down the line. So it's stability. So it doesn't mean that rates have to come down for that confidence to come back, which I think a lot of people think is the case. It actually just means that they don't go up. So this fires out a signal with no change in terms of the OCR of stability, which is a great first move. You know, if I think back to how people in New Zealand lock in the interest rates on their home loans, you know, generally the bulk of them lock it in for 1 year fixed. And the reason they do that is because they want that stability over the near term. They want to know that for the next 12 months that they're going to be paying the same rate of interest on that home loan. So that's number 1, stability. Number 2, it's on hold because the RBNZ and many economists, most economists now, are seeing that inflation is under control, and that's huge. Households can expect to not see a continuation of what we've seen in the last 18 months with prices of everything going up. And again, that filters back to the concept of stability, but it also means that we are confident in our ability to afford something. So our affordability around something is there if we know that inflation on the cost of what we need to eat or the roof over our head or these sorts of things is maintained. The other cool thing there is that we're actually seeing inflation decline from its peak. So it's not just staying flat like what I just mentioned with interest rates, we're actually starting to see it come off. And so, you know, that household position around what I've got left in my back pocket each week, hopefully it's not going to be a case of it getting smaller and smaller. It may actually start to widen out. So that's a real plus. But the other thing there for real estate agents is that with inflation in mind, we're actually starting to see some changes in the cost to build. And that's been something that's been really hard over the last couple of years for developers, is that constant march of the cost to build going up. The construction cost index is falling in terms of year on year, and the big drivers of that are a decline in consents, which means that there's less activity within the industry, and the stability in timber and steel prices and other building material prices. So again, what that means is there's less work out there for builders. So from a construction point of view, if I'm looking to build, there's more competitiveness in the market, and that pricing starts to become more sensitive in terms of adjustment, which is great. It means that at the moment, if you're going to build from new, you're more likely to be able to find tradespeople quicker at a better price and with a lower cost of underlying build costs. So all those things are hugely positive. The third and last thing that I sort of think is key in terms of my big 3 reasons why we're seeing some good positives in the last week is actually that we can sort of see that house prices have reached a stable level. And as agents, you've probably been watching this sort of gradual decline over the last 18 months or so. You would have seen the numbers thrown out around New Zealand sort of been down 12% on average in terms of house prices. And now what we're sort of seeing is that most economists are coming out and saying that we believe that we've reached the bottom in terms of that price movement. So what does that mean? We're not in a FOMO market. You know, it's not like we had back in 2020 where we had that sort of march in terms of prices going up and people wanting to sort of the fear of missing out being because of prices going up. And we're not seeing that in terms of prices coming down. We're now kind of into a flat period in terms of house prices. And in fact, I think if we look at Infometrics forecasting in terms of house prices over the next few years, they're sort of predicting growth of around 2.2% per annum from 2024 through to 2028. So it's a fairly benign period, but it again just signals some stability in the market. So the two big drivers really are around that certainty and stability within the market. And what that will do is it will help close up that gap between vendor and buyer expectations in terms of value, and it will sort of ease those nerves in terms of buyers around their ability to afford and sort of clarity on what their borrowing power is, and hopefully what that's going to do is drive that activity in terms of real estate sales. It's just a measure of certainty. That doesn't mean we're going to have a spectacular market over the next few years, but at least we're going to see some stability and some growth. Other things this week, we've seen Westpac come out with more options around their 1% energy loans, which is kind of was their answer to ANZ's 1% green loan type scenario. These sort of social loans around green initiatives, energy initiatives have become really popular across all of the banks and starting to see really good adoption. It's probably the reason you're seeing more EVs on the road, but it's also definitely good in terms of things like people actually upgrading their house to get better insulation, heat pumps and the likes. So yeah, Westpac have just come out with some more options on what those loans can be for, which is, I think, a good initiative. ANZ have come out with their final blueprint to build update. The key benefit there is, again, for first home buyers. Great time for first home buyers. I know I've said it a lot, but there's just so much in their favour at the moment. What it means for first home buyers in terms of the ANZ blueprint to build is that they can essentially borrow up to 90% on special rates, so they're getting good interest rates and high loan to value ratios. So it's a really good initiative, and I think it'll see some activity in that first home buyer space. Other than that, banks continue to offer good cash incentives. We saw ANZ pull back a little bit a week or so back, but they're still in the market and they're still paying good incentives. Again, you know, in terms of first home buyers, which in the past haven't got those incentives, they're the best I've sort of seen in my career, really, in terms of what first home buyers can get access to. I guess if you're not thinking about marketing to first home buyers in terms of your positions out there, now's the time. There's more opportunity at the moment in terms of their ability to access stock that sort of suits them, and the banks are there willing to support them. So that's it for me this week. Hope you've enjoyed the podcast, and look forward to hearing from you if you've got questions. Teller's always there in terms of running through the deal. So if you've got a client that needs help, we're happy to take a bit of time to spend with them and run through that. They can book us online at our website, teller.co.nz, or they can send us an email at hello@teller.co.nz. Look forward to talking to you next week.